On today's episode, we are going to take a quick look at two freelance marketplace leaders. The first one we're going to take a quick look at is Fiverr. Since this company reported earnings, the stock price is down over 20%. If we take a look from its 52-week high, the stock is down over 47.8%. The second stock we are going to take a quick look at is Upwork. This one is also kind of moved in the negative trend recently. So on today's episode, I want to take a quick look at both their earnings, see what's happening, and I'm also going to see which one I enjoy better. If this is your first time here, make sure to hit the subscribe button. My name is Najarro and I am a long-term stock market investor. So let's get started. Alright, so let's start off with Fiverr. As I am recording this episode, the stock is down 2% today, and that is since it reported earnings like we saw is down about 27%. We can see from its 52-week high, the stock price is down 47, almost 48%. So this is definitely a small market cap right now, sitting at $6.04 billion. So let's see what are probably some of the main reasons the stock price is down. I want to say one of the first things is after this company reported earnings, unfortunately, there have been a lot of negative or downgrading in form of price targets. Here they got cut down from 235 all the way to 200, from 300 down to 225, from 296 to 257, from 220 to 200, and from 200 to 170. So most of those stock prices, I think actually all those stock prices are still higher than where the stock price is at right now. But I do want to say, right, I personally don't follow analysts or their price targets, but I do believe it does provide some form of psychological changes to certain investors, and that is one of the main reasons the stock price is down. And before we take a quick look at their full earnings, I really want to see at what's really driving this stock price down, or the negativity and bringing all those downgrades, and that's the guidance this company provided. They kind of even decreased their guidance from last quarter, and that's what I believe is hitting this stock price the most. But before we take a quick look at the numbers, let's listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so if we take a look at guidance that they gave this most recent earnings, they expect for the full year of 2021 to be $280 to $288 million. This represents about a 48 to 52% year-over-year growth, so still super strong. But let's compare this to what they gave us last quarter. Last quarter, they gave us about $302 to $308 million. So a huge downgrade there on their guidance. I do believe this is the main reason the stock price is down, especially because it does not meet Wall Street expectations. Wall Street believed for the full year to be somewhere around $307 million in the average estimate. So this is definitely the main reason stock price is down. Regardless, this is still strong price, still strong growth, right? 48 to 52% compared to same time last year. Now let's take a quick look at their overall earnings. So overall earnings, the company did report 60% year-over-year revenue growth. So this company is still pretty strong. If we take a look at their financial letter, they actually give a strong a trend of how their revenue is doing. We can see revenue is up year-over-year, but it's also up quarter-over-quarter. Active buyers are up year-over-year, and again up quarter-over-quarter. Same as spend per buyer. That's up year-over-year and up quarter-over-quarter. They do mention one of the main reasons the guidance had to be weaker this quarter for the year is now that people are going back outside, now that vaccines are coming out, now that people are less likely to be in front of screens, their guidance is not as strong as they originally expected. Unfortunately, to my wondering is why now? I mean, did they not believe that vaccines or the world was going to change in a matter of time, especially since the last guidance? Last guidance, we were already looking at vaccines rolling out in certain parts around the world. So that has me a little bit confused, especially that huge decline in forward guidance. So if we take a look for this quarter, the company did provide better EBITDA margins of about 9.8% compared to the same time last year, which was 6.7%. So like I said, Fundamentally and financially, this company is improving. The main reason the stock price is down is just their overall guidance. All right, so that's enough with Fiverr. Let's take a quick look at Upwork. So as I am recording this episode, Upwork is down about 3.6%. Very similar marketplace, but I do want to say they are different in some ways. I personally am a user of both Fiverr and Upwork. I use Upwork for more, I want to say, and just this is just my opinion as a user. I use Upwork for more professional, as I am a freelancer. I do professional work through Upwork. I normally don't do it through Fiverr, and all the contracts I normally go through Upwork. Fiverr, on the other hand, I use it more as a content creator. If I'm looking for someone to kind of create something for me, some form of artwork, some form of introduction, Fiverr is the place to be. So even though they're both freelance marketplaces, me as an individual use them for different cases. So right now, Upwork is traded under the NASDAQ as ticker UPWK. It's down about 3.57, and we can see from its 52-week high, the stock has definitely seen better days. It's down 27.9%. And this one hasn't really taken a huge beating like Fiverr, and I do believe we'll take I believe I understand why that is. We'll take a quick look at that. This is also a small market cap of $5.5 billion. So if we take a look at Upwork's most recent earnings, they did report revenue growth of about 42% compared to same time last year. So we can see Fiverr is growing a bit faster than Upwork. But one thing Upwork hasn't really done much is change their guidance. For the full year of 2021, they expect somewhere between 490 to 494 million. This is kind of roughly what the overall street estimates. They expect for the full year to be somewhere between 487 million. So they're right up above guidance right now. So unlike Fiverr, which kind of had a decreased guidance, Upwork, on the other hand, did not. And I do want to say this is, again, because how users use them. I personally believe Upwork is a little bit more professional, and the overall professional and enterprise world, especially here in the United States, is really moving into a lot of contract jobs, into a lot of freelancing materials. So it's overall, even though things are kind of reopening back up here in the States, I do believe it's still driving a good portion of Upwork. So Upwork recent news on August 5th of 2021, they kind of mentioned an offering of a pricing offering of about $500 million for convertible notes, overall increasing their balance sheet and debt. We're going to take a quick look at their balance sheets in a bit, but there's not much more to talk about Upwork, right? Revenue for this quarter was 124 million. It was projected about 120, so they beat expectations. For quarter three, they also are kind of meeting expectations on revenue expected, and for the full year, like we just took a look at, are also either beating or meeting expectations, something Fiverr did not do this earnings. And I want to say another thing that has recently come in mind, even though it's old news, one of the biggest competitions, in my opinion, that can kind of come from this is LinkedIn is kind of entering the freelance marketplace. They're still, I want to say, in rolling things out. But once this happens, LinkedIn has become a very popular platform. It's something that other investors should keep an eye out. But now let's take a quick look at future growth for both Fiverr and Upwork. Let's try to compare both companies. So Fiverr right now is expected to grow 28.6%. where Upwork is expected to grow 22.1%. So Fiverr is definitely one to grow a little bit better and a little bit stronger. We can see, I do believe both companies, if we take a look at GAAP earnings, they're not profitable. But if we take a look at cash flow from operations, Fiverr is and Upwork is. Both of them are not positive in GAAP earnings, but they are profitable in cash flow from operations, which is normally what I like to see. One of my biggest red flags I want to say for Fiverr is this company right now has a nice amount of debt. They are investing a lot on technology and overall improvement their platforms, and they do have a nice amount of cash and short-term investments. They're currently positive in net cash if you subtract their debt, but still, I'm not a huge fan of how close the ratio is. Unlike Upwork right now, Upwork has plenty of cash and has very low debt. Obviously, that is going to change now with that offering that they're going to do, but it should increase that overall cash as well. Now, if we take a quick look at fundamental metrics, right, we saw in the future, Upwork is expected to grow at slower levels than Fiverr's, and historically that's also been the case. Upwork is not a fast grower compared to Fiverr. Fiverr also has better gross margins than Upwork. So because we see all of this, I understand that, hey, Fiverr is trading at a higher price to sales ratio than Upwork. Makes perfect sense. But at the end of the day, I personally, and this is real, right? I personally do enjoy Upwork a little bit more, just because even though the world is changing and kind of opening back up, it seems like Upwork is not making much changes to its future projections. So it seems to be a management team that knows really well how this company is going to continue to grow, unlike Fiverr, which kind of made that last minute, I want to say last quarter decision. And again, even though we've kind of known that vaccines have been rolling out, that parts around the world have kind of been opening up, so guidance should have been seen like that in last earnings. And also the overall balance sheet. If we take a quick look at technicals, I do want to say both Fiverr and Upworks are sitting at strong, attractive levels. I do have a position in both right now, and if I was bullish in both, I do believe at this levels it would probably be a nice time for me to kind of continue to build the base. Right now, if I was to pick one or the other, I think I enjoy Upwork a little bit more. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.